Well, let's get straight to the top story today. In a bid to provide some liquidity to the sector, the Reserve Bank of India has relaxed rules for the non-banking financial companies with respect to their loan book securitization. Mr. Ashwini Kumar Hooda, the Deputy Managing Director of Indiabulls Housing Finance, joins us to run us through his reading of this. Hi, Mr. Hooda. Thanks so much, sir, for joining in today. Well, let's focus on, the cooling off in terms of, in respect of the loans of the original maturity of around 5 years odd. Wanted to understand first, how much of your book falls under this category and what kind of a benefit do you see?
So 60% of our book is home loans and loan against property is another 20%. Most of these loans are above 5 years. So almost 80% of our book and an entire retail book now benefits from the dispensation that has been given. As we speak, almost 15,000 crore of additional pool is made available till December, and 25,000 crore of additional pool, if we count till March, is made available by this move of RBI.
Okay, so 15,000 crore till December and 25,000 crore worth of loans will be available for securitization on the back of this development till March. Mr. Hooda, afternoon, and thanks so much for joining in. Do you expect demand for this? Because earlier today we had the syndicate bank management and they were quite categorical when they said that we would prefer it if the loans have been with the bank, with the NBFC for over a year. So although the rules have changed to 6 months, the holding period has come down to 6 months, they are not willing to buy it. Can you assess the demand for your loans?
So clearly, there are larger banks in the country who are hungry for home loan assets in particular. And if you look at the revised guideline, then here the risk participation has gone up from 10% to 20%. So that should give a lot of comfort to the buyers, as a thicker skin of the seller of pools is there. My sense is home loan have an established track record of 40 years on delinquency side, and it's at 20-25 basis point NPA business for most of the originators. So these are high quality loans, and also one must appreciate that home loans, while seasoned for 6 months, does not mean they were given 6 months back. They would have been given long back, and during construction period of 2 to 3 years, the lender would have seen the pre-EMI repayment track record apart from 6 EMI track record. So in that background, I think the market as a whole should be willing to buy pools which are seasoned for 6 months, and there should be demand for such.
You see some demand coming in from mutual funds as well? You're talking about larger banks, so you're confident that demand is there for these loans?
So demand primarily comes from banks, as a large part of these mortgage pools qualify as priority sector for them as well.
Okay.
Mutual fund, it is more of a securitization PTC structure, which for originators like us, direct assignment structure works better. So as we speak, it is largely the banks which have this demand.
All right.
Okay, Mr. Hooda, you said 15,000 crore and 25,000 crore is the available pool for securitization till December and March. But are you willing to securitize the entire amount?
No, definitely we would not require to sell. In fact, we may not require to sell even 25% of this. So for the year as a whole, we had securitized 5,000 crore in first half, and we intend to securitize around 15,000 crore in the second half. So in normal course, that number would have been 8,000 crore. So we are only planning to sell 7,000 crore additional assets over and above our normal securitization program this year. And all of this money goes to pare down. We would pare down our commercial paper program by around 10-12,000 crore. So there is not a requirement, but the enablement gives a lot of comfort that these assets are available and a quick liquidity can be raised by selling these assets.
It appears, Mr. Hooda, that the market likes what you're talking about and the commentary that's coming in. Then you believe it's going to be quite a beneficial move to your company in particular, and that's why the stock is moving higher as we speak. Let's focus on your book. You had told us that I think 80% of your book will get a benefit out of this. Tell us, what kind of exposure do you have to builders out of your total book? And also, there's a query in the market in terms of, is there any kind of intergroup loans? Is that part of your book? The real estate arm, do they constitute some part of the total loan book?
So we had categorically committed to our stakeholders and rating agencies that no intergroup loans would be there, any borrowing or lending relationship with Indiabulls Housing with other group companies.
Okay, so that's
won't
clear.
Be there.
All right.
So there is zero exposure as we speak. On overall developer exposure, which is around 20% of the balance sheet, almost 10-11% of that is lease rent discounting.
Okay.
So these are very safe, secure loans, and the balance 9%, which is residential construction finance. A part of that is covered by lease rent assets.
All right.
And otherwise, these are top 30 to 40 developers of the country with mature projects. We have shared our entire developer portfolio with almost every fund manager in the country. So
the
there is no concern.
The point that you're trying to tell us, Mr. Hooda, is that these loans is 20% of your book, 11% is covered by the lease finance agreement, and the other builders, there's no need to worry. So the ratings out there will be stable, right?
Absolutely. We don't foresee any implication on ratings.
Have you invested in any of the bonds issued by Yes Bank, say the perpetual bonds of Yes Bank? Any sort of linkage with Yes Bank?
So we don't have any perpetual bond of Yes Bank on our balance sheet as of today.
Okay, but any other linkage?
So there is no linkage. In normal course, Yes Bank would have lent us. There is an outstanding working capital facility of 200 crore, and they would subscribe to our bonds. There is no linkage. They would not even figure in top 10 lenders to the company.
Okay, fine. You also said that you are looking to redeem about 10 to 12,000 crore of CPs, going ahead. If you could just walk us through what the asset liability ALM mismatch looks like right now till March, how much of it is coming up for redemption, and even on the NCD front, if you could throw some light.
So, we would bring out a detailed liquidity ALM report once this month is over. So early next month we will file that. Our ALM is one of the most matched, and what we want to demonstrate through our ALM is that even without borrowing a single rupee from the market, no commercial paper rollover, so everything gets paid, whatever liability comes due. We are solvent till perpetuity.
How much comes up for, how much for maturity by March 2019?
So March 2019, if I have to take all my commercial paper, including, typically it's a 4,000 to 5,000 crore of term loan and bonds, and there'll be 7,000 to 8,000 crore of CP. So if I have to take all that, it is around 12,000 to 13,000 crore that will come for repayment in March, until March. And we would have cash in excess of 22,000 to 23,000 crore.
Okay. So you have sufficient cash to meet all the liquidity requirements. What about NCDs? Are you facing any requests for early redemption of NCDs? Because that's what we're hearing in the market for some of the NBFCs.
Yeah, no. So our no fund manager has asked us to redeem any of our NCD. They were
smaller, premature redemption.
Yeah, premature redemption. So there were smaller mutual funds in September, late and October, first few weeks, where we bought back some of these papers. But right now, we have been issuing papers and nobody is asking for our early redemption.
Okay, fine. And also, if you could just tell us, what is currently the loan growth that Indiabulls Housing Finance is enjoying?
So our guidance to the market is that for this year we will grow between 15 and 20% on our loan book growth, and then profit should also be a similar number.
There's no risk to that number?
It is, unless something happens, we are on par to achieve that.
Okay, all right. Thanks so much, Mr. Huda, for stopping by and giving us all those details. All the best for the remainder of this fiscal. Well, the market's on the verge actually of moving into the red. It's up only around 7 points. Just a short while back, we were up more than 45 points. So a few stocks that should come up for you on the screen. Some of those OMCs have come in for selling. BPCL and HPCL, both of them have moved lower. I was looking at the intraday chart actually of Adani Ports, and that one as well is moving lower, so keep an eye out on that one. But I think a heavier stock that's moved lower is L&T, and that's the one that actually drags the index. So let's get the intraday chart of that stock as well up for you. And the reason that the Nifty Bank has moved to the low point of the day is ICICI Bank. Suddenly that stock has seen a sharp knock in the last few minutes or so. Keep an eye out on that one. But let's get straight then to CNBC TV18 exclusive. We learned from sources that the SFIO has questioned former IL&FS executives. Utkarsh Chaturvedi joins us on the phone line with all those exclusive details. Utkarsh, you're joining in person. Tell us, what are you picking up?
So, as you said, what we are picking up from our top sources in the serious fraud investigation office is one that Ravi Parthasarathy and all the other major executive directors of IL&FS have been questioned by SFIO. Now, what is SFIO looking at this point of time? SFIO has started probing the assets as well as investments of Ravi Parthasarathy apart from the company, because what they are looking at is whether the money which has been siphoned off in the preliminary inquiry has gone into making those assets in India and abroad. So that is something which is in radar at this point of time. What SFIO is looking at is all the assets, whether it be investment in other companies, whether it be properties in India and abroad of Ravi Parthasarathy, and what they're trying is to locate the source of that income. The same is happening with other directors as well, but in the case of other directors, what is also being questioned is that whether they were aware of the wrongdoings in the company or not. Now, also what SFIO is looking at is how was the money siphoned off. The whole modus operandi, what SFIO at this point of time believes, is that the tenders which were given to a lot of companies in the infrastructure projects, that is one way where siphoning off can happen. But remember that we are speaking about a company with 200 subsidiaries and a lot of ongoing projects, and every project has many tenders going on, and that is where SFIO is really probing all the subsidiaries, all the tenders. Now, the challenges before SFIO, the biggest one is the fact that it is a skeletal team. If you look at the whole SFIO team in Bombay and Delhi, they are not a lot of people, and that is why that the probe is taking a bit time. But what SFIO believes is that they are in prima facie, they have reached some conclusions. They have already questioned Ravi Parthasarathy once, but that is only an initial statement which is being told to us. He will be called again for questioning when further details on the investigation get revealed.
Okay, thank you, Utkarsh, for that. Let's shift our focus then to a mega CNBC TV18 exclusive investment guru, emerging market guru Mark Mobius of Capital Partners says that India is currently at the top of the emerging market pecking order, adds that India can see an earnings pickup once interest rates stabilize. Listen in.
I'd love India, not because I'm on Indian TV, but because there's so many opportunities in India going forward. So we're really interested in doing more in India. So I would say India is at the top of the list. Of course, China is still important, but not as important as India in my eyes. Then you've got to go to those countries that have really bombed out, so to speak.
Okay.
Countries like Turkey, where the currency has gone down by over 70%, places like Argentina. Of course, Brazil is high on our list. It's already jumped quite a lot from the bottom, but still it's got a long way to go. So those are the countries that interest us the most at this stage.
Okay. Well, what makes India tick for you?
First of all, diversity. You've got an incredible diverse list of companies in the various states. And also you've got incredible entrepreneurial activity taking place in India in many, many directions. And I think the relative openness of the Indian government to foreign investment is very, very positive. So you see a lot of the American tech companies going into India, and of course the Indian companies learn about these companies and then can emulate a lot of that activity and grow on that basis. And of course, as you know, many of the entrepreneurs in the US are Indian in their backgrounds. So there's an incredible concert of intelligence that's taking place.
That said, some investors lately have been a little exasperated by the lack of promised earnings growth. For the last 4 years, I think, analysts begin the year expecting a 20%, 25% earnings growth, and by the end of the year it's scaled down to high single digits, sometimes even low single digits. Will that exasperate you?
No, I mean, if you look at the average for emerging markets generally, it's high single digit and then low double digit. That is common. You must remember that the high interest rate environment in India does put a damper on Indian earnings for the short term. But going forward, of course, we're looking not at this year, but next year, the year after, over a 5-year period. I believe that the Indian earnings will catch up and do very, very well. So now it's sort of a base building period taking place. And as interest rates stabilize and even go down, hopefully, then you're going to see these earnings picking up very nicely.
What are the specific sectors where you're concentrating? You already spoke about Indian IT and how Indians have made their mark in infotech in the United States. Would that be a sector that you would go for?
Yes, provided that the prices are right. Okay. As you know, some of these stocks are pretty expensive, even looking at a long-term earnings momentum. So we have to be very careful as to which ones we select. So we're going after those tech companies that have a solid balance sheet, have something really different to say, and look like they're going to have reasonable earnings growth going forward. But in addition to the IT space, we're also interested in microfinance. That may be surprising to some people because of the difficulties that the financial sector has had recently in India. But I believe long-term, the microfinance, finance tech, fintech generally is a very interesting area. The other area that we're interested in is consumer space in retail. Because what you're seeing is a transformation taking place online, offline, coming together in the retail space. And that's very exciting.
Okay. Okay. I want to scratch the point further. Big giants like Amazon and Walmart have been interested in the retail space. Is that something that interests you as well, the few remaining Indian retailers?
Yes, definitely. We're particularly interested in those that are adopting the online technology to combine with offline. So this development is very, very important in retail. Retailers that are not paying attention to that will be in big trouble, in my view. Okay. So we're very interested in companies that can combine these areas and adopt that technology.
You refer to the financial space and the problems. Have you gone through the kind of contraction or illiquidity the debt market faced and that hurt the non-bank finance companies a goodish bit? Any thoughts on whether you think that problem is over and you will start buying the non-banks?
It's not over, but there are selected non-banks that are now at prices that make them terrific bargains. Okay. What is going to happen in the sector is that you're going to see a number of dropouts. A number of companies will just fail and fade away. And that means the survivors will have a bigger market share. The other thing that's happening is that these companies are beginning to realize that they've got to have their own funding base. So some of them are going for banking licenses so they can bring in deposits. That will be very, very important for survival of the sector.
Well, NBFCs are ruling the roost in the markets today. So Repco Home Finance up 7.5%. Divan Housing is inched up. So that's higher by close to about 6% And even Indiabulls Housing Finance, we spoke to the management earlier and they indicated that they will take advantage of RBI's easier liquidity in securitizing loans. So they will look to securitize about 15,000 crore worth of loans in the second half of this fiscal year or in H2 of FY19 versus their initial plan of only 8,000 crore rupees. So taking advantage clearly, and the market seems to have liked it. Let's invite our experts Ashwini Gujral and Prakash Gaba on the show now. Ashwini, afternoon. Quiet day, at least on the benchmark indices, but this is after a big rally that we've put in the last few weeks. Mid-caps are doing well, but the Bank Nifty is underperforming. So what have you made of the day so far?
Well, the issue is 11,950 was kind of an important zone,
and we've kind of returned from there. So for the moment, I think the financials have run their course, and they are not seeing the kind of follow through you would see in a stronger market. So my sense is that as long as 11,950 holds on, possibly you could see some downside on financials. In that case, I now have short positions on Bank Nifty. My sense is market may be getting into a consolidation, 10,750, 10,950 thereabouts. So because you are very close to the top after a 7-8% type rally, I think with today's high on the Bank Nifty, it could be worthwhile exploring certain short positions. Also, individual stocks, Union Bank is a sell with a stop of 82, target of 70. HPCL is a sell with a stop of 241, target of 226. And Bata is a buy with a stop of 1025, target of 1060.
All right, so Ashwini is going short in the index then at these levels. Ashwini, any disclosures?
We have short positions on some of these individual stocks and Bank Nifty.
Okay, all right. Let's get in a word coming in then from Prakash Gaba. Prakash, what's the take on the Nifty? And also, what are your picks for today?
Well, seen a good up move for last 5 trading sessions, including today. So this is the time for a pause or a breather. To me, the market is still up. I think the next technical targets are 11,084. It may take some time for that, maybe a few days for that, but it's heading towards that. So far, looks weak to me. And Bank Nifty, strong support in the vicinity of 28,750. Possibly we could see some support there, but yes, there is some weakness out there in the short term. So best is to be stock specific. Canfin Homes looks like a buy, can climb to levels closer to 290 zones, stop below 265 should be okay. And second is Strides Star, looking good. Pharma Pack is doing well. 480 is the target, stop below 450 should be okay.
Well, the Yes Bank stock trades in the green today after many such sessions where we did see some losses on that stock. This after Mr. Rajat Monga, the senior group president, said that the Reserve Bank of India has access to all information, including other group and promoter companies. He also said that reports of Rana Kapoor eyeing chairman seat has been taken out of context. Let's listen in to that exclusive conversation.
RBI has access to all information, including this. So the structure of these companies is independent of the bank. It is not right to call them group companies. Okay. They are promoter companies. So they are the group companies of the promoter structure. So they're not a group company of the bank. There is no interest or dealings of the bank with these companies. Mr. Rana Kapoor, who's our CEO as well, has already conveyed his ownership in these entities to his family. Okay. So he himself has no interest in those entities either.
Mr. Kapoor does not have any interest in Morgan Credits or Yes Capital?
That's correct. So his ownership does not have any linkages to those two entities. Those two entities are entirely his family's entities. And the bank has no relationship with those companies, and therefore do not entitled to be called group companies in the nature that we were discussing.
The other big concern that shareholders have had is the exposure that Yes Bank has to NBFCs and HFCs, perhaps even to developers. Can you share some numbers for us? What exactly is the exposure? You've spoken about the 2,600 crore exposure you have to the IL&FS group. Right. But what else?
So let's start with the HFCs. Our exposure is 3.2%. And when I say exposure, it includes all forms of risks that we may have exposure to, loans or bonds or off balance sheet. So it is all in the entirety. This portfolio is rated AA or better for 90% of the constituency of this portfolio. So which is the HFC portfolio. And HFCs and NBFCs have been through some liquidity, let's say, challenges in the recent past, and in our opinion, because the correspondences and conversations with NBFCs have been already very low for the last 3 weeks. So it is over in terms of the short-term challenge that NBFCs and HFCs were facing, which was the rollover of their short-term instruments and maturities. And banks have, including us, have stepped up to be able to carry them through their point of challenge. The next portion of our book will be NBFCs, which is about 2.6% of our total exposure. NBFCs, while HFCs do have much higher rating profiles, the NBFCs do have a stagger of rating.
Yes.
So our portfolio there is about 90% more than A or better. Developers, again, as part of our third quarter disclosures, we had indicated an exposure mix of 5.6% to developers and 0 SMA2. So we have not a single loan to a SMA or to a developer which is extending beyond 60 days in terms of payment delinquencies. It's mostly construction financing. We are largely sole lenders.
Do you think there's been now quite a bit of pressure on Mr. Kapoor to perhaps sell his stake? The way the stock has fallen, and it's been talked about.
Yes, there should not be any pressure on him to sell down his stake. In fact, we believe him when he says that he will stay put on his holding. He also will know that these are times where there is deep value in the valuation. And the share has corrected quite a bit. There is deep value. In fact, these are opportunities for us to sustain through these times.
There was talk that in that peace accord with the family, he spoke about his being chairman. Is that possible at all under the rules? If not CEO, he can be?
Current regulatory framework is very different. So as this few years have gone by, and you will notice with most private sector banks that the only person who can be a bank's chairperson is someone who is independent. And naturally someone who is of eminence. So it is something which is, in my opinion, being read out of context, because it might be of a structure of the past, but the current context of the structure is very different.
What would the capital raising plans be, and in the near future, will you tap the markets to raise funds?
There is a transition phase that the bank is undergoing, where we have more work to be done in terms of supplementing the board back to its strength. We are looking to appoint chairperson. We are also undergoing a CEO search. So as far as capital raising is concerned, I think the bank is already enabled by the shareholders to raise an amount of up to $1 billion. I think it will make more sense for us to look at that opportunity once these current uncertainties have been made more certain.
There has been a fresh round of buying in mid-cap IT names. So take a look at the intraday charts of mid-cap IT names like Mindtree and NIIT Technology, Hexaware. An up move has started in the last 30 minutes, so at the high point of the day. In fact, for this week, it has been the IT names which have led from the front. So leadership stocks this week include a TCS, which has seen about close to a 10% rally in this week itself. Infosys has seen a rally of close to about 8% this week. The stock which is also on our radar is Vodafone Idea. It continues to slide lower, down 4% right now. For the week, it's down close to about 12.5%. And this is after CRISIL downgraded their rating on the NCDs, which are worth 6,000 crore rupees. So the rating has been downgraded to A+ from a AA-. So that's putting incremental pressure on Vodafone Idea. But let's move on then.
Yeah, let's move on there. Let's move to a CNBC TV18 exclusive. We understand that Kesoram Industries may diverge its tire business. Sonia joins us with all those details. Sonia.
Well, Nigel, you know that this story has been doing the rounds for many years now. In the FY18 annual report, Kesoram Industries did mention that they are looking to find a strategic partner to induct into their tire business. We understand from sources that a demerger is on the cards, and within the next fortnight that demerger may come through. The first step is the demerger. Second step is to induct a strategic partner and perhaps create a JV of the demerged tire business. Now, why are they doing this? Because the tire business has been running into losses for many years now. Cumulative losses of more than 1,000 crores is what the tire business has seen. Remember, they manufacture and sell tires under the brand Birla Tires, and the reason for the losses is they are largely present in the commercial vehicle biased tire space, which has been losing a lot of sheen because the focus has now shifted to radial tires. Also, they are not present in the high margin passenger tires business. They are looking to induct a partner into that technology as well. Haven't found anything just yet. As I mentioned, the tire business has been under pressure for very long. In fact, even the revenues for the tire business from about 2,500 crores a few years ago has now come down to just about 1,000 odd crores or so. And the debt is very high. More than 3,000 crore debt consolidated, out of which 800 crores is from the tire business alone, which is the interest cost of which is eating into their profitability. So the need of the hour is to induct a strategic partner, the first step of which will be a demerger perhaps in the next fortnight.
Okay, Sonia, stay on because Tata Motors is also weak in trade. So that's down about 2.5%. JLR is going to pause production at its engine factory in UK.
In fact, if you remember last month, in the month of October, that is, their Solihull plant was also shut down for a few weeks because of slowdown concerns, Brexit uncertainties, etc. Now we understand from reports that even the Wolverhampton plant in UK, the engine factory, will be shut down for 2 weeks. This would mean 500 employees would be affected, but they will pay these 500 employees their full, salaries during these 2 months. Now, the same old reason cited, Brexit uncertainties, slowdown in diesel demand, overall slowdown in China. In fact, China is the big pressure pocket for them. UBS has come out with a note this morning where they've cut the target price on Tata Motors to 200 versus 280 earlier. They say that the recent sharp fall in the China volumes is very disconcerting. In fact, they're turning more cautious on the India truck business as well. And they've cut estimates both for JLR as well as for the India business. For JLR, they now expect a negative 5%. So a 5% fall in volumes in this year and a 1% fall in volumes next year. Back to you.
Okay, all right, Sonia, thanks so much for that. Well, let's move on to the latest in the Reliance Communications Jio case. And the Supreme Court has cleared the decks for the spectrum sale from Reliance Communication to Rel Jio. Ashmit Kumar joins us on the phone line with all those details. Ashmit, over to you.
So it's a big relief coming in as far as the RCom-RGO deal is concerned. All decks have been cleared. The Apex Court has now paved the way, has instructed the DOT to come out with the necessary clearances and the required NOC. Now, here are the facts of the case. The DOT essentially had moved the Apex Court in challenge to a TDSAT order of October 1st. The TDSAT order had struck down the demand of the DOT seeking a bank guarantee of 2,900 crore rupees. The DOT had moved to Supreme Court and again had reaffirmed their demand for a bank guarantee of 2,900 crore rupees in light of unpaid spectrum dues. Now, this, of course, was opposed by RCom. RCom had said that they're not in a position to, that they're facing insolvency proceedings, that the lenders are the ones who've taken charge of their assets, are selling them, and that this sale is critical for the lenders, for the DOT, as well as for the company in question, RCom. Now, on the back of all of this, what the Apex Court has held is that, yes, it is critical for this sale to go through. It will satisfy the dues that are payable to the DOT. It will also satisfy the dues payable to the lenders. And towards that extent, the Supreme Court has now directed RCom's sister company, sister concern real estate, Reliance Realty, to come out with a corporate guarantee of 1,400 crore rupees. They are to submit this corporate guarantee by December 2nd. Subsequent to that, within a 1-week period, which means till December 9th, the DOT will have to come out with its necessary clearances and the NOC, which in turn will pave the way. So essentially, the Apex Court paving the way, clearing the decks for the RCom-RGO spectrum deal. Back to you.
Last day of the November, and it's as volatile as the whole month really has been, where you have the crude oil prices closing down by nearly 22% in this month, and that pretty much has been the case for the metal prices also, where we are closing the month of November 20% down for steel, 18% down for iron ore, and the other metals which have seen very sharp declines in the same sense have been nickel, which is 8% down for this month. Today, of course, we've seen some support come in for the nickel prices, but the best performer, and you have to give it to that, of course, has been copper, where you have seen stronger fundamentals continue on the chart, on the ground as well, and that one is up nearly 5% for the month of November, with buying calls continuing for that sector or that metal going forward as well. Himanshu Gupta of Globe Capital now joins us to help you make strategies in that space. Himanshu, hi. What is your sense in the metal space, and how have you been reading the copper price movements?
Hi, Manisha. Thank you very much. Well, clearly the entire base metals pack have been struggling amidst the uncertainty between the trade wars between the US and the China. And that has been the reason, despite the stronger fundamentals, the metals are not being able to perform better. As far as the performance is concerned, I think till the time this uncertainty is clear and till the time we have something forward to look up to, and especially the markets will be looking up to this weekend G20 meeting, because only after that, because when the demand scenario for the upcoming quarters is clear, only then the individual fundamentals are likely to play for the positive side. So as far as the copper price movement is concerned, I think the metal is looking supportive despite of a lot of pessimism seen in the entire base metals pack. The metal has actually managed to stick to a range. And I think in case there is a positive development hereafter, we expect a very strong 3 to 5% kind of rally coming into the metals like copper.
Himanshu, also come in for the crude oil prices, because while of course we are closing this month in the negative, the expectation is that we might see some consolidation going in for the commodity from here on. What is your sense? There of course is a G20 meeting today. You have the OPEC meetings lined up for 3 to 4 days in the next week. How are you looking at the prices as we get into those most important meetings?
Well, I think, Manisha, ahead of this important meeting and after the strong sell-off that we have seen, there is a strong possibility that we can see some short unwinding and the profit booking on the short side. Yesterday also we have seen prices briefly slipping below $49, $50, and equally we have seen for the first time that a very strong buying was seen at a lower levels. So I think there is a possibility that we can see some kind of rebound hereafter, and a lot of pessimism is already priced into the markets. So as far as the trading strategy, or if one has to take a position ahead of the event, I would recommend to take positions in the options, wherein on the MCX one can go long in the 37 and 3800 strike calls, wherein the risk reward is still favorable. I expect from here over a couple of days and over a couple of weeks prices to rebound from here, and on the lower end after $48 and $49 are expected to hold on the lower end, and we can expect a recovery towards $55 to $56 on the WTI.
Okay, all right. Thanks so much for that, Himanshu, as well as Manisha. Well, talking about short positions, the market has given up all its gains. So we're down 40 points from the high point of the day. The Nifty Bank is deep in the red as we speak. Keep an eye out on the screen.